Hi, welcome back to the show. I am here with our good friend Tucker Maxwell, who is working on his seventh year in at Guild Mortgage. He is in the top 1% of loan origination nationwide, and he will provide top customized advice. Tucker, I want you to address my comments about 401k versus down payment assistance. What is your take on my Real Talk segment?
Yeah, no, I love it, Dan. I actually used a 401k loan to buy my first home. And it was exactly the situation that you described. We were, evaluating, do we pull money out of retirement to use for down payment, but also buy down the interest rate, maybe buy out some of the private mortgage insurance. And so we sat down with our financial advisor and we did exactly what you said, a holistic view of our cash flow and said, okay, if we don't do this 401k loan, our monthly mortgage payment is going to be higher. And yeah, we're going to not have that 401k loan repayment. So we're going to take home more of our check. But as we did the math, it made sense for my wife and I to take the 401k loan, have a better mortgage payment to improve our cash flow, and then pay it back to the 401k. And the cool thing is our 401k was paid back with a timeline that we got to decide. We got to pick 3, 4, 5, or 6 year repayment plan. So you get to kind of choose your monthly amount that you're going to repay it. And in the long run, you pay yourself back plus interest. So in terms of recouping that retirement funds, once you pay it back, you're back to where you were in square one. So you're not actually really, unless you're right about to retire, you have plenty working years ahead of you. You should be able to recuperate anything that you took out with that repayment.
Yeah, and I think there's something specific in what you said versus what I said. Is I said tapping your 401k funds. You said take a loan from your 401k. It's two very different things, right?
Absolutely. Yeah. And, post pandemic, they pretty much have given us all the ability to do hardship withdrawal and pull funds out of our 401k without the need to repay it. But even before that, you've always been able to do a 401k loan to yourself from a 401k to buy a primary residence. And so that's the important thing is this is a loan, you're paying yourself back plus a little tiny bit of interest, plus your normal contribution into that 401k. You're going to end up in the long term having more or the same amount in retirement and have secured a home price in a much earlier year.
Yeah, it's a great way to help get yourself into a home now while there isn't the frenzy like there may be when interest rates drop. All right, let's get to your topic. I'm super intrigued. Your topic was loans for ADUs and DADUs, or DADUs is what we're calling them. So let's first start off by describing what a ADU. It's an additional dwelling unit. Okay, I guess you're answering that question. Sorry.
No, let's hear it from you. You're the expert real estate agent, so let's hear it from you.
Okay, so additional dwelling unit is just an additional unit. It may be a part of the house. It may be attached. DADU is a detached ADU. The Washington State has recently passed some pretty liberal zoning laws that are allowing for DADUs and ADUs. DADUs. How do you say it? DADUs. Right, whatever. So there's a lot of actually frenzied buying right now of this, and I'm curious because I am about to build one myself. So talk to me about what loan programs are available to fund something like this.
Yeah, so let's first start by talking about somebody who wants to purchase a property that has the space and the zoning to build one. So we're talking about a fresh new buyer. They don't currently own the home, and we have renovation products available for them to add these accessory dwelling units or the detached version of it. But you can do a traditional renovation loan and get the funds to build this, accessory dwelling unit when you're purchasing the property. So it's a really great way to secure a property. We buy it, we secure the property, the renovation or the construction funds are put into a separate account, and then the contractor pulls from those as the build out happens. So it's a great way if you're, a family that's multi-generational and you want to have that place for the in-laws or the parents but they want a separate entrance and kind of their own space. They can now identify some properties specifically on the east side and allow them to build these and have the funding all secured with one loan.
With one loan. Okay, so that would be an individual that doesn't already have the property. What about somebody who does?
Yeah, so take, for instance, somebody that has a great interest rate on a first mortgage. It's 3%. They don't want to disrupt that. So we're not trying to do a cash out refinance to obtain those funds. A great way to tap into that is a home equity line of credit. And a lot of lenders now have done fixed seconds as well with a fixed interest rate, because the kind of the hard part about home equity lines of credit right now is the interest rate changes. And as rates go up, that payment is unpredictable and it's changing, each month as the Fed makes adjustments and so forth. So the nice thing about these equity conversion mortgages, it's a fixed payment. We know what it is. It's predictable. Use those funds to rebuild or to build this accessory dwelling unit. Then you have the property reappraised, and eventually when rates come down, you can roll it all together.
Okay, so then basically there's two products: home equity line of credit or a fixed second.
Yep, exactly.
Okay, they're making a comeback.
Exactly.
Yeah, because that's very interesting. So then, what about, can I use this to like maybe add a pool to the back?
Absolutely. Yeah. So probably not real popular on the east side, although we're getting more sunny days. But yeah, that's the other thing that has come up recently, is not only adding these, living quarters, but can I add a pool, or I just need to do some remodels or a new roof or things like that. But there's a lot of innovative solutions out there to allow you to obtain financing to enhance the property you already own.
Okay. And then finally, renovation property. So if I'm out there and I find a home that's like kind of fallen down, is cash the only option?
It's not. So this is a big thing that we've seen, is if you go online to any of the listing websites, you'll see distressed properties where it says, investor alert, cash only, cash only. These loans can qualify for those properties. So even though it might not meet our today's health and safety standards in order to meet an appraisal requirement, we can use these same products to help secure that property, do whatever work is necessary to make it livable, and then move in once that work is done. The great thing is the buyer doesn't pay mortgage payments until the work is done and they move into the home. So that could be a 6-month build out where they're fixing whatever distressed issues are with the house. I think you and I have talked about these, and with low inventory, this is a big portion of the listings right now are these distressed properties.
Yeah, it's actually one of the things that a lot of house hacking, right, where you actually go to buy your primary residence, fix it up, and in a couple of years sell it, get to the next level. And so that, finding a way to finance it, whether it's from, like we said, whether it's from your 401k, a loan from there to help you get into it. I very rarely have I seen people get themselves in over their skis if they don't have a primary source of income. And that's usually when that happens, is most people that don't have a primary source of income getting into an investment and not having done the calculations. But other than that, if you have durable income, if you're handy, or if you know people who are handy, which we're going to bring our handyman on here soon, that can easily turn what we always call sweat equity. So exactly. Tucker, I always love the conversations, and this is a great, I think the ADUs and DADUs are definitely a way to add income producing value too. Just as a thought out there, is in the state of Washington, and specifically where I'm at in Everett, is we're going to be able to build DADU and ADU, and then we're going to condoize the property and be able to sell off those units. It's being done in Seattle right now. As a matter of fact, one of our clients just got into contract on a property that is micro. It's a micro property basically, but 1,500 square feet with the location that's fantastic. Well, that's going to be happening all over Everett. So anybody that's watching this, investors wise, that wants to participate in this, we're actively looking for investors to participate in doing that. So if you watch this, give Tucker a call for financing, and of course, reach out to the Eastside Real Estate team. We can help you. All right. Thank you so much, Tucker. Appreciate your time and sharing these tips. If you want to continue discussion with Tucker, give him a call at 425-757-9202, 425-757-9202. Thanks for coming on, Tucker.
Yep. Thanks, Dan.
All right. After this short break, we're going to do our home tip time. That's what it's called, home tip time, with David Stallings, right after this short commercial break.